In this video, we will compare LLC versus LLP. We'll break down the key differences between these two popular options and help you make an informed decision that best suits your business goals. If you're not sure if you're going to go for LLC or LLP, visit Zen Business and Inkfile. Their links are down in the description so that they can help you steer your business in the right direction. And with that in mind, let's get started. Overview. When embarking on a business venture with multiple owners, concerns about personal liability often loom large. In such cases, it's prudent to explore the differences between limited liability partnerships and limited liability companies to determine the most suitable business structure for your enterprise. Both LLPs and LLCs blend elements of general partnerships and corporations, offering a level of liability protection for owners while retaining some of the simplicity of a general partnership. However, despite their similarities, there are critical distinctions that entrepreneurs should carefully consider before making this important decision. Key similarities and differences. Before diving into the specifics, it's essential to understand that your choice of business structure carries both short-term and long-term implications. To make an informed decision, consult with your legal counsel, accountant, and tax advisor. Basic overview of each entity. Limited liability partnerships. An LLP closely resembles a general partnership, requiring a minimum of 2 partners. Unlike a general partnership, an LLP is a distinct business entity offering liability protection to its partners. Official formation paperwork is necessary for establishing an LLP, in contrast to general partnerships that automatically form when 2 or more individuals engage in business. Ownership in an LLP can be flexible, allowing individuals, partnerships, corporations, and other entities depending on state laws. Ownership restrictions may apply in some states. For instance, California restricts LLP formation to licensed professionals like lawyers, architects, and accountants. A written partnership agreement is advisable for documenting ownership percentage, roles, and responsibilities. Limited liability company. An LLC is an official business entity that can be formed by 1 or more owners. Similar to an LLP, multi-member LLCs are equivalent to LLPs in terms of ownership structure. LLCs provide personal liability protection to their members. State registration paperwork is required to establish an LLC. There are usually no restrictions on the number of members an LLC can have, and ownership can include individuals, other LLCs, corporations, or foreign entities. There are usually no restrictions on the number of members an LLC can have, and ownership can include individuals, other LLCs, corporations, or foreign entities. Some industries, like insurance and banking, may be prohibited from forming an LLC in specific states. LLCs may be further categorized as professional limited liability companies for licensed professionals. A written LLC operating agreement is recommended for documenting ownership details, roles, and responsibilities. Ownership comparison. LLP ownership. LLPs typically have 2 or more owners, with no strict cap on the number of partners. And LLP partners participate in business management, akin to general partnerships, while enjoying limited personal liability. State statutes govern who can be an LLP partner, usually with flexibility for various entities to participate. Some state-specific restrictions may apply, influencing ownership options. A written partnership agreement helps clarify ownership percentage, roles, and responsibilities. LLC ownership. LLCs can have 1 or more owners with no strict limit on the number of members. Certain industries, such as insurance and banking, may be prohibited from forming LLCs. Professionals like doctors, lawyers, accountants, and architects often have options to establish a professional limited liability company. A written LLC operating agreement is recommended for documenting ownership details, roles, and responsibilities. Liability comparison. LLP liability. LLP partners' personal liability protection depends on state laws. An LLP is a separate legal entity from its owners, limiting personal liability to the partner's capital contributions. Personal assets of LLP partners, such as homes, cars, and retirement funds, are generally shielded from business-related liabilities. LLP partners are individually responsible for negligence, errors, and supervisory lapses within the business. Some professionals may require LLPs to carry liability insurance or maintain escrow accounts for added protection. LLC liability. LLC members are shielded from personal liability for business debts and claims, as the business is considered a separate legal entity. The degree of protection may vary by state. Typically, LLC members are not held personally responsible in lawsuit against the business, protecting their personal assets. Exception: if an LLC member engages in unlawful activities, personally guarantees a loan, or fails to maintain a clear separation between personal and business affairs, liability protection may be compromised. Income taxes comparison. LLP taxes. LLPs are considered the same tax-paying entity as their owners. LLPs file an annual information return to report income, deduction, gains, and losses, with partners reporting their respective shares on individual tax returns. All tax obligations, including some in self-employed taxes, pass through the LLP's owners. LLC taxes. Multi-member LLCs default to partnership taxation akin to LLPs. LLCs have tax flexibility, allowing them to elect S corporation or C corporation taxation. Electing S corp status reduces self-employment tax, as members pay Social Security and Medicare taxes only to income taken as salaries. C corporation taxation entails double taxation, with the LLC paying corporate tax first, followed by individual taxation on member income. State-level income tax treatment may vary for LLPs and LLCs, and some states impose franchise or annual taxes. Management comparison. LLP management. LLP owners have flexibility in assigning management roles based on financial investment and professional expertise. A partnership agreement should outline financial contributions, profit distribution, roles, decision-making processes, and dispute resolution mechanisms. A well-drafted partnership agreement facilitates cooperation and conflict resolution. LLC management. LLCs may be managed by owners or appointed managers as defined in the LLC operating agreement. An operating agreement clarifies financial investments, profit distribution, roles, decision-making, dispute resolution, member departure, and other operational details. Starting on LLP or LLC. Business formation paperwork. LLPs require state-specific registration paperwork and may necessitate the publication of registration or formation details in some states. LLCs must file articles of organization with this state, and some states may require similar publication. Business name registration. Upon submission of formation documents, the business name becomes registered with the state, preventing similar names for other entities. Some states may require LLPs using fictitious names to file a DBA registration. It's crucial to conduct a corporate name search before registration to ensure name availability. Registered agent. Both LLPs and LLCs must designate and maintain a registered agent authorized to accept legal documents on behalf of the business. Considering selecting a registered agent with nationwide authorization to accommodate expansion beyond state borders. Business licenses and permits. Depending on the nature and location of the business, LLPs and LLCs may need federal, state, or local licenses and permits. Licensing requirements may include tax permits, general business licenses, health permits, zoning approvals, and professional licenses. Employer identification number. Both LLPs and LLCs should obtain an EIN from the IRS for tax purposes and business documentation. An EIN separates business finances from personal finances and facilitates tax filings. Ongoing business compliance. Both LLPs and LLCs must adhere to ongoing compliance obligations to avoid penalties and maintain liability protection. LLP business compliance. File annual returns or reports. Hold annual meetings and record minutes. Maintain a partnership agreement. Pay estimated income taxes quarterly. Retain a registered agent. Renew licenses, permits, and fictitious name registrations. Notify the state of significant changes. LLC business compliance. File annual reports. Hold annual meetings and document proceedings. Maintain an LLC operating agreement. Pay estimated income taxes quarterly. Retain a registered agent. Renew licenses, permits, and fictitious name registrations. Notify the state of significant changes. In conclusion, the choice between an LLP and LLC requires a thorough evaluation of your business's specific needs, your future goals, and your legal and financial considerations. Seek professional guidance from Zed Business and Inc. File to make an informed decision that aligns with your entrepreneurial aspirations and ensures long-term success. Their links are in the description below. And there you have it, LLC and LLP. Which business options are you going to go for? Please let me know in the comment section down below. I hope this video was helpful. Thank you so much for watching. Subscribe.